Welcome to the podcast that will teach you how to successfully invest in and build steady streams of passive income from the highly lucrative niche of mobile home park investing. Veteran real estate investors Kevin Bupp and Charles Dehart from Mobile Home Park Academy will personally share with you the valuable lessons they've learned along their journey as mobile home park investors, so that you too can learn how to build massive cash flow and huge profits from this extremely lucrative niche. So without further ado, let's welcome your hosts for today's show, Kevin Bupp and Charles Dehart.
Welcome, guys and gals, to the Mobile Home Park Academy's weekly podcast, where we'll provide all the information that you need to know to successfully locate, negotiate, close on, and make huge profits from the lucrative niche of mobile home park investing. I'm your host, Kevin Bupp, and in today's show, we're going to be bringing on a special guest, and that is one of our very own, Jethro Van Aardt. Jethro, or Jet as we like to call him here in-house, is our Director of Operations here at Sunrise. Jet brings with him an extensive background in both commercial real estate and asset management, and truly has become a critical cog in the Sunrise wheel of success that we have here. And in his current role of Director of Operations, being that we're a smaller shop, Jethro wears many different hats, including, but not limited to, heading up our due diligence efforts on all new acquisitions. He's the lead of our property management team. He assists with debt placement on new acquisitions. He also assists the leadership level decisions that we make here at Sunrise, among a litany of other special projects. And one of those special projects that we recently tasked Jethro with was working through a consolidation plan for our property level insurance on our mobile home park portfolio. Now, prior to our most recent switchover to this more of a consolidated plan, we would typically source individual property-specific insurance coverage plans, most of the time through Kurt Kelly with Mobile Insurance, which a lot of you guys are familiar with. We've actually had Kurt on the show a few different times. A great firm over there. But as we've grown larger, we have found that there are multiple benefits of doing more of a consolidation plan and going with one coverage that will basically encompass all of our properties versus individual plans. And so, if you're a small operator with only a few parks, there are downsides to this approach as you continue to grow your portfolio in size. And that we're going to talk about those kind of the benefits today of going into more of the consolidation route. Just a few of the benefits that we have found is better organization, right? One policy versus many different policies, cost savings. And then in addition to that, higher quality of coverage are just a few. Again, Jethro is going to kind of go into detail, being that he's the one that spearheaded the special project. And so I'm going to leave it up to him to speak to it in more detail. And so, guys, I'm real excited to get on to the show with Jethro here. But before we do, I just want to run through a couple of housekeeping items with you. First and foremost, and I tend to forget to mention it on a lot of shows, but I'm going to bring it up here today. We're always in deal acquisition mode at Sunrise Capital. We're always looking for deals. We're always looking for opportunities to pay big finder's fees. And so if you're out there on the hunt and you find an opportunity that maybe you can't take down yourself, we'd love to hand you a handful of cash in exchange for a purchase sales agreement on a great opportunity. Additionally, if you're looking to take down a deal but maybe want to stay in it as a partner, we have the ability to be a capital partner or an operational partner or both, and can help you take down a deal that you might not have been able to take down on your own. And so you can reach out to us directly if you have some opportunities you'd like to discuss. Go to our website, sunrisecapitalinvestors.com, and you can just reach out to us through the Contact Us page. And this might be the perfect way for those of you that are brand new to get your foot in the business, right? To stick your toe in the water, all while working with a group that has a very strong track record, which is what we have. So looking forward to seeing any opportunities you guys might be open to sharing with us. Next up, we just opened up a second tranche in our Mobile Home Park Growth and Income Fund. And so if you're an accredited investor and you're interested in partnering with us on our personal acquisitions, please visit our secure investor portal by going to invest.sunrisecapitalinvestors.com. And by going there, you'll be able to create a secure account and also review our PPM and investment summary for the MHP Growth and Income Fund 2. Okay. And lastly, guys, if you happen to find yourself in the Tampa Bay area, I'd love to connect with you during your visit. If you've got some free time, reach out to us by going to sunrisecapitalinvestors.com. Again, just go to that Contact Us page and let us know when you're coming into town, and we'd love to meet up. And I'll tell you one cool thing is that if you make the trek, not just into Tampa, but if you make the trek over to Safety Harbor, which is where our office is located, it's about 20 minutes west of the Tampa International Airport, so right across the bay. I'm going to treat you on a tour of the Jacobson Manufactured Housing Plant. Okay, so that's 1 block away. They literally make mobile homes right down the road from us. So you basically could come, get to meet us in person, and then go get to see how the sausage is made, which is pretty cool. So it's a huge plant right down the road from us. I don't know how many homes they actually make or ship a year, but it's a pretty high production. They've been in business for many, many years and make a very high quality product. So if you've never seen a frame up build of a mobile home, whether it be a single or double wide, come visit us and we'll walk down there together and we'll take a look at it. Okay, guys. So without further ado, I'd like to welcome Jethro Van Aardt to the show. Jethro, how's it going, bud?
Hey, Kev. Good in you. Thanks for having me on the show.
Yeah, man. This is a special occasion here on the Mobile Home Park Investing Podcast. So I know that a few months back, we brought Brian on the show, who's another one of the principals here at Sunrise. And so I'm slowly but surely convincing the different team members here to come on the show. And so Jethro, you're here this week and very much looking forward to talking to you about, this topic of insurance consolidation. And, this is something that was a very important project in-house for us. And I thought that it would be, very relevant to speak about here on the show because, it might not be the best fit or the best topic for that individual that hasn't bought their first park yet, or that maybe only owns 1 or 2 parks. But if you're just getting into this business or if you're still small, but you have plans of growth and you're looking to grow a large company and a portfolio of properties that spans, let's say 1,000 plus units, then this is a very relevant conversation. And it's something you need to be thinking about as you grow your portfolio. And so with that, Jethro, before we dive into the, to the meat and potatoes of that topic, what I'd love for you to do, again, you're kind of behind the scenes here. None of the listeners, or very few of the listeners, probably have ever met you or even heard about you. So take a few minutes, tell us a little bit more about your background. I gave that very brief introduction, but your background's much more extensive than that. So take a few minutes and just tell our listeners a little bit more about you, okay?
Yeah, for sure. So I was born and raised in South Africa. I've been in the US now for just under 2 years. The connection to the US is my beautiful wife, Katie, who's from Chi-Town. We met while I was in the US. I was on a traveling stint for about 3 years, and we met down in Fort Lauderdale and fell in love. I convinced her to move back to South Africa with me, and we were living there from about 2007 to 2017. And we had actually our 2 wonderful daughters in South Africa. She loves it. It's a beautiful place, and she calls it her home. So we've got 2 homes. I was traveling. A lot of South Africans take some time off after they've studied or just before they go into college. It's kind of like a cultural thing. The Kiwis and the Australians do it too. And we often get on the boats. We're an outdoors country and got some great sailing in South Africa, especially in Cape Town. And so a lot of us get onto the boat scene, the big super yachts, the mega yachts, either the sailing mega yachts or the motor yachts. So I did that for about 3 years. I sailed over with a small crew on a 44-foot catamaran from Cape Town to the British Virgin Islands, and then eventually made my way up to Fort Lauderdale and met Katie there while she was on spring break. So that was a great time, had fun. And then we moved back to South Africa around about 2007. Professionally, I cut my teeth in commercial property management. I focused on retail and office predominantly. I ran a small portfolio in Cape Town for 2 really, really successful businessmen, and worked my way up the ranks there to eventually become their portfolio manager. And then I switched. I did that for about 2.5 years, 3 years. And then I switched over to private equity, which was really a phenomenal experience. I worked with some very, very sharp guys. Joined a small team there. At the time when I joined them, there were about a team of 7. That's including the 2 founders. And when I left in early 2017, we had grown the deal team to over 50 members in 4 countries across the world. In 4 countries, we had about 10,000 staff in our subsidiaries, our underlying subsidiaries. So we grew very quickly. It was a phenomenal experience. I was fortunate enough to play on both sides of the table in terms of within the company. I started out as an analyst on the deal team, and then moved over to the operational side, the portfolio improvement side, which is very much what I'm doing with you now. And really got to learn how to run businesses. I loved it. I got to spend time with guys that had built massive businesses, 300-400 staff, built it from the ground. And it was just phenomenal time to actually to just be with those guys and spend time with them and see how they run their businesses. So that was great. We then decided to move over to Chicago. And that was 2017. And I spent a very brief stint in banking in Chicago. And we were there for about 12 months, but ultimately, it's a great city. I love it, but man, it's cold, and I miss the ocean way too much. My kids grew up on the beach. Katie loves the water. I love the water. I'm a surfer. Unfortunately, there's no waves here where we are, but I still paddleboard. I love being in the water. So we had to be back by the ocean. So we moved down to Florida, and that's when I met you guys, and I found my home now with Sunrise. So that's a quick background of me.
Yeah, well, we're happy to have you. And, just a funny insight about Jethro. So obviously you grew up in South Africa. He loves the warmer climate, had a challenge with Chicago weather. And so very recently we've had a lot of due diligence trips that have just happened to be in very cold climates in the northeastern part of the country, New York. And I forget where else we've sent you over the last couple of months, Jethro, but Jethro always forgets to pack a jacket. It's the funniest. It's not funny, but it kind of just, we'll end up, I think we ended up in Michigan a couple of weeks ago, and it was like 10 degrees. Yeah. And we looked over at Jethro as we were, getting to the, the shuttle vehicle that was going to take us to the rental car place. And he had no jacket on, and he had a sweater, but no jacket. And I was like, what are you thinking, buddy? Do you not own a jacket? I'll let you share mine if you'd like. But anyway, I think you have a jacket now, which is good. So stepping it up in the world. But
when I left Chicago, I burnt all my deep winter clothes, as I call them. I literally gave them all away. I thought I'd never have to wear one of those jackets again or those boots. But alas, I did. So actually on my last DD up in Buffalo, I landed and I was like, it was just that cold snap that hit that part of the country. And I literally went straight from the airport to a store and bought myself a deep jacket. And now I have one.
Yeah, so. Thank God for Burlington Coat Factory. So one of the other things I want to make a mention of here, because I think it's important, it's aside from the topic of the show today regarding insurance, but I want to just really briefly, I want to share the story of how Jethro connected with us here at Sunrise. If you guys have been listening to the show for quite some time, then you've heard over different periods, we've made a mention of that we're looking for some talent. Really, we're a growing organization. We're always looking for folks that can align themselves with our core values, but also are looking to kind of grow with we're not a startup anymore, but we're in a stage of a growth company, and that find excitement in that, but also are looking to bring value to whatever organization they might go to. And so Jethro actually reached out to us on a whim and created the video, and it was a very compelling video that essentially said, guys, here's the litany of different ways that I can help you grow your organization. And it was compelling enough that we reached out to him and, did an over the phone interview. I think Skype is how we did it the first time. And ultimately, I think you were already moving down here. So it was kind of a match made in heaven. And, but anyway, he reached out to us, and it was more of a, hey, guys, here's how I can add value to your organization. And we weren't even looking for not necessarily that position to be filled at that point in time, and he talked himself into it. So
had to do a bit of pitching.
And it's been an awesome ride. So with that, let's go ahead and get on to the topic of discussion here, Jethro, and that's the exciting topic of insurance. And so I'd like you to kind of run with this, because again, this wasn't just a matter of making a few phone calls and kind of filtering out and finding one broker that we decided to work with. It was a much more elaborate project, an in-depth project. And so maybe we could start by you discussing a little bit of, and I kind of did in the introduction, but maybe you can go into a little bit more detail, the original catalyst to even, get involved with this insurance project and look at a consolidation.
Yeah, for sure. So, one of the first things you do when you get to a certain scale in any business, I think, you start looking at where's the low-hanging fruit that you can pluck to create some efficiencies and pricing efficiencies and just administrative efficiencies. And insurance is normally one of the first things private equity guys will hit. It's a high-value, complicated product, but at the end of the day, it's relatively easy to actually implement because of the corporate structures out there. So not too difficult to do. It's just time consuming. It does take a bit of time, but ultimately it's one of the low hanging fruits that private equity guys consider to do, is to hit a group of companies or a group of properties that you could place under one umbrella cover or a group cover. If you, like most operators, small operators, or, if you've got one or two locations, you're going to have specific cover for those locations. So it's an administrative nightmare. And it's just from risk management efficiencies, it's also just very difficult. So when you do get to a certain scale, it makes sense to kind of bulk all your properties together, not only from a pricing reduction, but risk management and efficiencies, and administrative efficiencies. So that's really, we were at the time when I joined you guys, we were just on the cusp of hitting that spot, and we started looking to it. So that was around about October last year. We actually started the process, and just to give you an idea of how long it takes, it took us, we went live now 1st of February with our new structure. So it does take a bit of time, but it is definitely worth the while.
Yeah, fantastic. And I think the best way to kind of go into the step-by-step process is just that, Jethro. Maybe kind of lay it out. I know you were very methodical with how you approach this. And so I'll kind of leave it up to you to kind of guide us through what that looked like. Everything from seeking out vendors, quickly filtering out the unqualified, and really just focusing on the ones that ultimately, you had to make a decision between. So maybe walk us through that process if you could.
Yeah, for sure. So there's two ways you could approach this. There's the traditional pricing approach where, you get some brokers to go out and basically get some bids for you. And then you make your decision purely on price, which is got its inherent flaws. And I don't recommend that. And we can get into why. The second way, and is the way we approached it, is first do broker selection. So first choose the brokers who you want to work with before you go out and start bidding pricing. You really want to actually choose your broker first and then let him go out to the market and put your best foot forward that way. Now, the reason for that is because the insurance industry is pretty complicated. It's not like, you're building a home and you price it out to 4 GCs and they come back with bids and you decide like that. The insurance market doesn't like you having a broker, or you could possibly have 3 to 4 brokers approaching the same carrier. The brokers don't like that. The underwriter doesn't like that, because ultimately the carrier is not sure which broker you're going to go with. So they're not going to put their best pricing forward. And that's what it boils down to. That's why you want to choose your broker first. You also want to be sure that you've got the right person servicing you. You might find a broker that gets the best price for you, but then he doesn't really understand your business. You have a claim and then there's problems. Your carrier might be fantastic. You might be backed by a really good carrier, but the guy in between, your broker, he might drop the ball, and you don't want to be dropping the ball when a major catastrophe hits you, like a tornado or a big fire or anything like that. You want to have a guy that's got the experience and that can really understand your business. So that's really important. So I approached it from that level. I reached out to, I asked for a couple of referrals within the industry, guys that we know, like our bankers, et cetera, who do they recommend? We obviously also invited the brokers that were working with us already. We had 2 brokers at the time. I also invited them to the process. And I basically laid out a plan on how we would approach that. First, I drew up a document, a request for proposal document. And that basically is a document that outlines a whole lot of questions that you could ask the brokers. Something ranging from, tell us about your business, tell us how you set up, what industry do you focus on, how many pads do you have under management, what's the value of your policies that you underwrite. You really want to get an idea of how big they are, how do they understand your industry. That's key. You obviously want to ask for some references, et cetera, et cetera. So my request for proposal had about 12 questions, and I sent it to all of them, and then gave them 2 weeks to reply back to me, and really just analyzed those responses. Now, when you're doing this project, you've got to be careful of personal bias creeping in. You don't want to choose a broker because you like the guy, you like the team. When your investors say to you, "How did you choose your insurance program?" You've really got to be able to have a methodical approach and explain why you did it. So what I did was I used a decision matrix tool, which is, again, it's an old private equity trick that the guys use. I basically ranked the 4 brokers on different areas, experience and platform, and I gave them a scale ranking for that. I gave hunger for business, so that is defined as, how excited, how hungry were they to actually gain our business. And you'll be surprised. You think that's an easy one, and everybody would be hungry, but that's not necessarily the case all the time. Scalability is also a big one. You've got to be sure that you can work with a partner that can scale with you. We're a highly acquisitive business. We've got 4 or 5 deals in our pipeline at the moment that we're busy with DD at the moment. And you've got to make sure that they can actually scale with you and that they think big. They are a corporate structure. like everything in life, you get brokers that are small. They don't have access to products that the big corporates would have. So you've got to be aware of that. So that's what I call scalability. I also rank them according to the response to my questions, and then just interpersonal dynamics. So, how I got on with the different teams over the 4 months that we were going through the process, how I got on with them. And I rank them like that. And that kind of takes out the subjectivity if you rank them according to a decision matrix model. And ultimately, whoever comes out at the top is the team that you're going to go with. So that was kind of the approach that I took with the guys.
Hey guys, Kevin Bupp here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my two podcasts, Real Estate Investing for Cash Flow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche. And that's the phenomenal niche of mobile home park investing. For those that don't know, I've been a full-time real estate investor for nearly 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe you don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in our up-and-coming deals. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing you with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please go visit sunrisecapitalinvestors.com and click on the investors link to get signed up. It's absolutely free and you'll get placed on the priority list of when new opportunities come along. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-CASH-FLOW without the O. And one of our investor relations team members will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule a call and let's get on the phone and talk. And with that, guys, I like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show.
What did you quickly discover? I know you made a mention of you would just expect that everyone was hungry for the business, right? I mean, all these companies are very much open to new clientele. And so everyone should be, very aggressive with the request for a proposal. And that's not what you ran into though, right? You kind of the complete opposite. So give me the experience that you had once you actually went into this analysis with these different providers.
Yeah. So I think sometimes, it is a mixture of, I've already got this, they're already my clients. So, they're happy with me. They're going to continue with me, even though they're going through this process. The good chance they're just going to stay with me.
Complacency, right? Never be complacent.
Exactly. Never be complacent. And so that was a big one. And I think it's also just sometimes, I guess, leads into, it is part of complacency, is the size. Some of the guys thought they were just too big to really get too excited about this. They have bigger fish to fry. And they kind of don't think, well, this could be a portfolio that's going to ultimately grow and grow and grow, and I want to have a part of that. So those were the two main issues when it came to hunger for business for me that I found.
Did you quickly narrow it down? What was it quickly narrowed down from? Was it 5 to 3? Was it 7 to 5? I mean, give us an idea what those numbers look like.
4 to 2. So that decision matrix helps you, once you've got all the information back from the guys and you've had your initial meet and greets with them, and, they obviously need to start understanding your business, especially the brokers that aren't part of your business, that haven't worked with you before. They need to kind of understand your business too. And you actually have to supply, a lot of information to them. You have to show them everything, your entire structure as it is right now. So that takes a lot of time to get all that data collected, et cetera, et cetera. But once you've got that request for proposal back and you analyze it and you compare it against how the guys are answering, and do they understand, one of the key questions is, what do you recommend for us? I've explained to you how our structure works. I've explained to you how what locations we're in, what states we're in. What do you request for us? What do you think our biggest risks are? And you'll be amazed at the varying responses you get from there. And those were a couple of my key questions that I really wanted to understand. What do you recommend for us? And I got wildly different answers across the four brokers.
Interesting. So once you narrowed it down to 2, Jethro, was it a very close head-to-head match, or did one far outweigh the other?
There was 2 that were a very close head-to-head match. It was the 2 new brokers we had invited to the team, to the process. And ultimately what it boiled down to was just one or two specific things on how they answered the questions. And really, again, like I said, you've got to be very, very careful of personal bias creeping in. But it ultimately also boils down to there is a part of that is, who do you feel most comfortable with in terms of, you're going to be working with this team for a long time, and you want to make sure you feel comfortable with them. So ultimately it boils down to that too, that part of it.
Mm-hmm. Okay. And then we didn't really go into detail as far as the, kind of the size threshold, the size of the portfolio, what these companies were looking for. But I know that's going to be slightly different for each, but if you just kind of throw a ballpark figure out there, what really is that threshold that they're seeking?
Yeah. I would say anything between 800 to 1,000 pads is probably where you would start seeing some pricing efficiencies. And that's assuming, your current portfolio isn't priced very efficiently. Funny enough, our portfolio was in the pricing side was priced very efficiently, because we were working off our property manager's broker, and our property manager has scale. They manage 14,000 pads. So because of that relationship, we had really competitive pricing. But generally, I'd say at about between 800 and 1,000 pads is when you really could start seeing some great pricing efficiencies, and where really the brokers would start getting excited. Anything smaller than that, it's going to be difficult to get the brokers excited, because it takes a lot of work on their side too. Even though it's new business for them, it is a lot of work analyzing your current policy, especially if it's inefficient, your structure's inefficient, where you've got 2 to 3 policies per location. And, if you've got 12, 13, 14 communities, that's a lot of work in analyzing and going to the market, and the underwriter having to look and analyze your portfolio. So I'd say about 800 to 1,000 is the right number.
Okay. So we talked about all the benefits and efficiencies associated with going this route after you get to a certain size, but do you see that there's any risks or downsides with this approach once you're to that certain scale?
Yeah, I think there's always risk, definitely. The good thing is, and I'll explain what the risk is, but as insurance is, the insurance industry is a highly mathematical industry, and you've got teams of actuaries poring over data. And this is a very, very common structure, not just in property, in across any industry. The corporate kind of portfolio insurance structure is very, very common. And your underwriters, your carriers would never, ever partake in a product like this if they felt that there was a high probability of risk or even some chance of risk. So it's very calculated. But for an example, what could happen is I'll use the umbrella policy as an example, which is one of our group covers within our portfolio right now. Umbrella insurance is really just top-up insurance for general liability. It's that extra insurance you take out to be safe and to make sure that should somebody sue you, and it's a big case, your GL will cover a lot of it, but you've got additional coverage in your umbrella. Now, you could have an event where at 3 of your locations, all at once, somebody sues you, and they're all major court cases. The way the structure works is we've got our cover of umbrella cover at about 5 million spread across our entire portfolio. And the chances of 3 cases are coming up, 3 claims coming up at different locations is highly unlikely. But what could happen, and ultimately you'll use up that coverage very quickly, and then you don't have any more coverage for the rest of the year. So for example, those 3 cases could take up 3 million of your 5 million cover. You've only got 2 million left for the rest of the year to cover the rest of your portfolio. So that could be a risk, but like I said, it's highly calculated, and guys would never do this product if they felt that, their clients were at risk or the entire industry was at risk. So that would be the one risk. Other than that, to me, there's no real downside. I mean, it's a no-brainer to have efficiencies, to be dealing with one renewal date with your policy versus multiple renewal dates. If you're a highly inquisitive company like we are, you don't want to have to continuously, during the due diligence process, get multiple quotes. This is a very streamlined process where you give them very, very basic information and they can get a quote to us very quickly and just slip it into the portfolio easily. So from an efficiency standpoint, it is just an absolute no-brainer. And then, of course, again, like I said, the risk coverage, it is by far a superior product. The corporate kind of style portfolio product is by far more superior than your normal individual policy, just in the risks that you're being covered by.
Yeah, no, absolutely. And I'm not going to make a mention. I don't think we should make a mention of the companies that were kind of in the running, but maybe we should make a mention of who we ultimately decided to go with. Would you mind sharing those details with the folks?
Yes. We ultimately went with the IMA Corp, Jed Bond's team. Fantastic guys, very, very experienced in the industry. And you've got a team of 10 guys that look after our portfolio. And that's not just, the front broker, that's the account manager that's dealing with me. You've got all the back office staff too that are dealing with the actual claims, et cetera, et cetera. So we went with the IMA Corp.
Okay. And guys, we'll include the details for the IMA Corp inside the show notes as well. So if you find yourself at that point today and you want to start going down that road, feel free to reach out to them. And if you're not there yet, it's good to keep in the back of your mind that ultimately as you grow your portfolio, this is surely one of those things you want to pursue when the timing's right. And so, Jethro, with that, is there anything else that we might have missed regarding this process or project that you worked on regarding insurance? I mean, is there anything that you feel is relevant that we might have missed out on?
No, I think, like I said, it's insurance is a complex product. So when you are going out there and you're comparing your different products, just make sure you're comparing apples to apples. For example, there's the obvious things like location risk. Are you in Tornado Alley versus, a very safe location? That's an obvious one. But then there's other things like there could be, for example, New York. Insurance rates are extremely expensive in New York because it's a highly litigious state. And not many carriers want to be in New York. So when you're comparing your product and your policies, be sure that you're comparing apples to apples. That's one of the big things to look out for. No 2 products are created equal. They might have the same name, i.e. business interruption coverage, but they're actually not the same coverage when you look into it. To the technical details and just simple things like location risk can be very different.
Mm-hmm. Yeah, you bring up a good point there, and this is a little off topic, or not really, but regarding New York, we own a number of communities in New York, and if you guys are out there, if you're underwriting deals and you don't own anything in New York, you haven't had experience of working in New York, first and foremost, the taxes are horrific. I mean, that's you'll figure that pretty quickly, but the insurance, equally as much. And so if you've underwritten a bunch of deals, especially when it comes to whether it's the general liability for the park or the park-owned home coverage, and you're trying to use the metrics that you've associated with other parks and let's say basically another part of the country, whether it be Pennsylvania or Virginia or North Carolina, if you're using that same type of pricing, you absolutely need to readjust your figures and get a real quote before you underwrite it. Because we found that insurance it's probably about, just generally speaking, again, every market's a little different, every state's different, but probably about double what the norm is.
Yes. Yeah.
And their taxes are about 4 times what the norm is.
Yeah, exactly. Yeah.
Okay.
So it is very expensive.
Yeah. Well, Jethro, this has been a lot of fun, man. I really appreciate you coming on and definitely will look forward to bringing you back on future episodes. And, what I'd like to do is really work towards covering other key aspects of the operation side of the business. And, as you know, our whole goal here with Sunrise is to help help folks out there that are, whether they're currently in the industry or looking to get into this industry and really just give them a real world picture of what this business looks like and the internal workings of it. And so I thought this topic was a great one to cover today. And I know you've got a lot of other valuable information up your sleeve. And so we'll look forward to bringing you and your unique accent back on the show, because I know that everyone's going to love this as they're driving, especially the ladies out there. No, I'm joking. So, buddy, thanks for coming on here. And
it's a pleasure.
Yeah, guys, that's all we have for today's episode. But before we say goodbye, I just want to remind you of the free gift that we offer to all listeners who take the time to leave a rating and review on iTunes. We'll actually give you the exact cold call script that we use within our own business. We buy a number of deals each and every year, a lot of deals from direct marketing efforts to owners. And one of the methods we use is cold calling. So we outbound dial each and every day. And this is, again, the exact cold call script that we use. To redeem that free gift, just after you submit that review in iTunes, go ahead and send us an email to gift@mobilehomeparkacademy.com and just tell us who you are and what screen name you use to leave the review. And we'll go ahead and ship that cold call script right out to you. Also, be sure to stop by our website, mobilehomeparkacademy.com. You can listen to all of our previous podcast shows. We've got over 100 up there, so lots and lots of hours of great quality content. In addition, you can download a free ebook, which is called The 21 Biggest Mistakes Investors Make When Purchasing Their First Mobile Home Park and How to Avoid Them. This is absolutely a required read. It's an easy read, and if you're brand new and haven't bought a park yet, then you need to dive into it right away. And so, guys, I want to thank you for stopping by. Jet, thank you for joining us here. And this is your host, Kevin Bupp, signing off until next week. Take care, guys.
Congratulations for taking the necessary steps to achieving massive success through the highly lucrative niche of mobile home park investing. Be sure to visit our website, mobilehomeparkacademy.com, to download your free digital ebook version of the 21 biggest mistakes investors make when buying their first mobile home park and how you can avoid them. And while you're there, be sure to subscribe to our free monthly mobile home park investing newsletter, which is jammed full of valuable tips, tricks, and strategies to help you accelerate your path to success as a mobile home park investor. More information about this podcast and its hosts can be found by visiting mobilehomeparkacademy.com.